This software stock has the potential to become one of the biggest surprises of 2026, especially as Palantir's revenue growth and profitability trends continue moving in a positive direction. While the company's progress has not gone completely unnoticed, a broader group of investors simply needs to recognize what is unfolding beneath the surface. Once that awareness spreads, the narrative around the stock could shift quickly. Over the past several months, holding Palantir Technologies stock has not been particularly exciting, and that hesitation makes sense given the broader market environment. Shares of this artificial intelligence software leader remain priced at extremely high levels, trading at more than 200 times expected profits for 2025, which are estimated at 72 cents per share. On top of that, investor anxiety has been building around the idea that many artificial intelligence stocks are caught in an overheated market cycle that could unwind sharply. When fear about valuation and speculation dominates sentiment, enthusiasm naturally fades. Still, as the calendar turns and the year moves forward, there is no clear evidence suggesting that the artificial intelligence transformation is slowing down or falling short of expectations. Businesses across industries continue to adopt data-driven systems, automate decision-making, and invest heavily in software that can handle complex problems at scale. In that context, Palantir's stock price could find a renewed energy sooner than many expect. If that rebound occurs, a key driver may be the market developing a deeper understanding of how Palantir's business actually operates and why its economics improve over time. Rather than constantly rebuilding its technology from scratch, Palantir focuses on creating powerful artificial intelligence platforms that can be adapted for many different customers. Designing and coding these systems is difficult, costly, and time-intensive. However, once the core platforms are fully built, deploying them to new customers becomes far more efficient and requires only limited customization. This structure creates a powerful scaling effect, where each additional customer contributes more to profits than the last. As the customer base grows, margins naturally expand, and the overall business becomes more efficient. This operating leverage has already started to show up in the company's financial results. During quarter 3, Palantir delivered revenue growth of 63% year over year, reaching $1.18 billion. At the same time, the total cost required to generate that revenue increased by only 42%. Even more importantly, total operating expenses rose by just 25%. When revenue grows much faster than costs, profitability accelerates rapidly, and that is exactly what happened here. As a result, operating income increased by more than 3 times compared to the prior year, while net income more than doubled. Although a significantly higher tax burden reduced some of the impact on the bottom line, the overall trend remained very strong. These results illustrate how Palantir's model becomes more powerful as scale increases, reinforcing the idea that long-term profitability is not just possible, but increasingly likely. Looking ahead, analysts appear to share this view. While revenue growth is expected to remain strong and even accelerate from current levels, profits are forecast to grow at a much faster pace. Earnings are estimated to rise from 72 cents per share in 2025 to $2.21 per share by 2029. That kind of earnings expansion highlights just how much operating leverage the business may generate over the coming years. Of course, this does not eliminate concerns about valuation in the near term. Palantir shares still trade at roughly 112 times trailing sales and about 172 times expected profits for 2026. For a period of time, investors were willing to overlook these lofty figures and focus instead on the company's long-term story, technological leadership, and strategic importance. As time goes on, however, it becomes more difficult to ignore how long it may take for the company to fully grow into its current market value. That said, Palantir does not need to justify its entire valuation overnight, nor does it need to accomplish everything within a single year. What truly matters is demonstrating a clear and credible path towards sustained margin expansion and long-term profitability. If the company can continue showing that its profit margins are widening at a meaningful pace, investors may be willing to tolerate a premium valuation while that transformation plays out. While the stock remains speculative and carries real risk, there is a strong chance that more investors will recognize this long-term trajectory at some point during 2026. As that realization spreads, confidence in the business model could grow, and sentiment around the stock could shift in a meaningful way. If that happens, Palantir's expanding margins and improving profitability could become the spark that reignites interest and drives the stock price higher. In the end, Palantir's revenue growth and profitability continue strengthening despite recent investor skepticism. Although shares remain highly valued at more than 200 times expected 2025 earnings of 72 cents per share, concerns about an artificial intelligence bubble have so so far not been supported by real evidence of slowing adoption. Palantir's business model benefits from strong operating leverage, since its artificial intelligence platforms are expensive and time-consuming to build initially but relatively easy to deploy to new customers, allowing margins to expand as the company scales. This trend is already visible, with Q3 revenue climbing 63% year-over-year to $1,180 million, while costs and operating expenses rose far more slowly, resulting in operating income more than tripling and net income more than doubling despite higher taxes. Analysts expect this dynamic to continue, forecasting earnings growth from 72 cents per share in 2025 to $2.21 per share by 2029. While valuation remains elevated at over 100 times sales and well above 100 times expected 2026 profits, Palantir does not need to justify its entire market value immediately, only prove that its long-term margin expansion is real, which could eventually convince more investors and reignite the stock during 2026. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.